G'day folks, welcome back to another update for Bitcoin and Ripple. Now the charts are showing a bearish momentum still, but there's that possibility of a retrace in play.
Still bearish, but possible retrace.
We're going to include some back testing as well. Also, don't forget to hit that like and subscribe button to support the channel, and reference the +1 videos to get a deeper dive into some of our trading strategies. Bitcoin currently stands in a phase of rebound following a sharp correction, buoyed by improving institutional flows and anticipation of central bank easing, yet remains highly sensitive to geopolitical shocks and macro liquidity shifts. XRP, meanwhile, is gaining traction thanks to regulatory clarity and growing adoption in cross-border payment corridors, offering a promising growth path, though it still faces material regulatory and macro risks. So looking at Bitcoin on the weekly chart first, we did have this bearish divergence, lower highs on the CCI versus higher highs on the price. We drew a 23-38% target range, and that was drawn by the Fibonacci down to that low there before the divergence started, and that's at 23-38% Fibonacci range. That's a minimum. You can see there it sort of paused there for a while, for a number of weeks, before finally breaking through and below the 50% retrace level. Now, where we are, you'll notice here the CCI is still dropping. There's no sign on the weekly of a recovery yet, although we've got a slight bull candle at the moment this week. So that's why we look at the lower time frames. Going back to the daily for a moment, I've marked this as a support level at 84,700. That could be a turning point possibly, but I wouldn't be placing long orders on it yet. Wouldn't be buying yet until we started seeing the price and the CCI break higher than the moving averages. And that's the purpose of those moving averages. But at the moment it's still bearish, although notice the CCI is about to touch that moving average band. So if you're going short and trading on the daily, you would be closing out your positions at the moment and getting ready for deciding whether to go long or short as long as it breaks above those moving averages. Also looking at the 1 hour chart, we dig deeper again, and you can see there on the 1 hour it's already broken long. But again, the trading rules here is we don't go long until the daily. If you're trading on the 1 hour, we don't go long until the daily is also in a long position. Now we did have a bullish divergence here, higher lows versus lower lows before our last video. Drew a target range there, and that was between that Fibonacci range, between that point and that high. That was at 23-38% minimum. You can see it touched it, then it proceeded to continue to the downside. Now what you'll notice is the price and the CCI kept dropping, and that there on the CCI is, I consider it to be a double bottom on the CCI, versus, you'll notice there, let's get rid of that Fibonacci for a moment. You'll notice there that, I'll draw another one, from that point to there is a different divergence. So that's a bullish divergence at a second level. So what we do now is we draw another Fibonacci target range, go back to that high, and you can see there that's also hit that minimum retrace into that 23-38% range. Now again, we can't tell how far it's going to go. It can actually continue further to the downside, or it can continue to break through that 38% range and go higher. We can't tell at this point. That's why we look at all the different time frames. So again, always trade in the direction of the higher time frame. Now we go to the back test, and what I've done, if you go back to the daily for a moment, I've marked here with arrows where you would have gone long and subsequently short. So short from around the 11th of October. And on the short positions from the 11th of October, you would have taken those short positions. And again, I like zooming out here on the 1 hour chart and focus on the moving averages as opposed to the price bars. So you can see that the moving averages of the price are in decline. So was the CCI in that little range, and you would have got out as soon as you started seeing that moving average band on both the CCI and the price turn up. Little gain there, go short again there during that little period, and again seeing that CCI turn up and the moving average of the price turn up, you would have closed it out there, no positions held, and you would have made a little return and follow that same strategy, that same trajectory. This drawdown here and this drawdown here, you'll notice here the moving averages are in an upswing. So if you're going short, avoid going short during that little period, obviously, especially when the CCI and the price are in an upswing. and you would have started going short again when the CCI and the price moving averages started to go down. You'll notice here the profitability started to increase at that point, and you would have got out of that short position at that level there. Where we are at the moment, again, paying attention to these bullish divergence, going short during these downtrends on both the price and the CCI, and closing it out when you see the moving averages turning up. So you would have closed it out at that point there. So Ripple has a similar sort of pattern, although notice here we had a very sharp decline on the CCI versus higher highs on the price, and that actually broke down. This is a weekly chart. It broke down again, sort of touched that 23% range, Fibonacci range, then it finally broke to the downside. Now at the moment, both the price and the CCI are still in decline on the weekly. So if you're trading on the daily, you take short trades only until we see this break higher on both the moving averages. On the daily, that's again been in decline, and I've marked there where you would have been going long and short respectively, going short from about the 7th of October, so remember that for the back test, and you would have closed out on the back test each of these at the very latest when the CCI touches that moving average range. You wait for the CCI to break to the downside again, and you would have gone short again at that point there. Now this little period here, you don't go long there. Ideally you want to wait for the moving average band to turn up. That would have been a better area to go long because the moving average band on the CCI started to turn up. This was still, notice the moving average band was still in decline. So even though the CCI broke higher, the moving averages of the price were still in decline. It leveled out here somewhat, but notice here it was still in decline on the price. Bit of a break above there. Again, notice the CCI was still in a downtrend, and then you would have started going short again, and you would have closed it out. If you were trading on the daily, you would have closed it out on when the CCI touched that moving average band on that candle there. So, and there's no divergence at the moment on the daily. Looking at the 1 hour chart, you'll see there is a bullish momentum at the moment on the 1 hour. Again, don't go long here. You want to wait for the daily to also break long before taking long trades. If you trade this, you're basically gambling because you don't know if this is a real recovery or whether it's just a small retrace, and you really don't know how far this would have gone to trace and go bullish at this point. Now, there's no divergence at the moment for this one that I can see, so that's looking okay so far. So looking at the back test, going short from we said the 7th of October, again following the trajectory of the moving averages, going short during those little periods, paying attention primarily with the price moving averages, but paying attention to any divergence. You can see there's a divergence at that little spot there, higher lows on the CCI versus lower lows on the price. The CCI is more of a indicator to show you and giving you a warning sign to get out of any potential short trades in this case. So you would have let it run, and you would have closed it at the very latest when the moving average band started to turn up at that point there. Here you can see a very sharp increase on the CCI. That was your early warning sign, as I said. Again, notice here we've got a bullish divergence. You would have gone short during that little period, and you would have closed it out at the when the CCI and the price moving averages started to turn up at that point. Now, this little area here, you'll notice the price was consolidating. The CCI is giving you an early warning to go short, although you would have waited for that moving average band to start turning down on the price, which it did there. And you can see there the profitability started to increase if you're going short as well. And where we are at the moment, again, you would have been going short during this little period and closing it out somewhere in that range there, even if you had a couple of contracts open. We also run a weekly bullish share scan for various regions of the world's markets, and we post it on the Patreon page.
Really?
And these are some of the trades we've traded since the 21st of September this year. And these are all closed trades, by the way, so don't go buying any of these at this point. And they've returned 11.57% so far. They're all small trades. So to get access to that, consider subscribing to the Patreon page. Links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.